because I
Hi, everybody. Welcome. Good to see you. D. Maxwell, thanks for coming. Jamming, thanks for coming. Scott from Canada, hello. Tom from San Antonio. Antonio is the coolest town. Hello, Vincenzo, Matthew, welcome. And for all of you that haven't announced yourself, welcome. I hope you're doing well today. Hope you had a good day. And let's read a legal disclaimer, shouldn't we? Today's demonstration is designed to instruct you on using MetaStock and the company's software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I want to say welcome. I hope you enjoyed that legal disclaimer. I sure. I want to introduce our guest today. Our guest is Ed Downs. He is somebody that's been a partner of MetaStock for a long, long time. I'll let him give you the exact number. I remember we were selling some technologies for him, called OmniTrader. People really liked kind of the stuff that he developed and designed. We were working on a couple for, I think, 3 or 4 years. It's amazing how time flies. But in the meantime, we've done Fulgent AI, a really good Fulgent or artificial intelligence product. And today, specifically, he's going to be talking about a chart pattern engine that he's put into MetaStock that I think is just awesome. So, yes. I hear that. Yeah, I hear that. Are you
muted?
Well, we're just going to mute him, and maybe that'll make it go away, but he is right. I can hear that. Yeah, it's still coming through, though. That's very interesting. We added some beeps for today. There's another one.
Yeah, that was me.
Oh, all right.
I think it's people coming into the webinar. I think it's just beeping when that happens. So I think. But
you mind, and maybe turn off your system sounds, and maybe that'll help, unless you need them on. So, but yeah, every time I am hearing a lot of beeps and boops. So,
maybe they'll go away.
All right, maybe. Maybe. How are you doing today?
Doing great, Jeffrey. Just great. Thanks for asking me to on again.
I know I do an excellent job introducing you every single time, but
you do.
What particularly would you like the audience today to know about you?
Well, gosh, as you said, you and I go way, way, way back. Like, to date us like that, it's not a very nice thing to do, but it's true. It's good. So I guess the thing I'd like all the attendees to know who haven't seen me before or my involvement with MetaStock is we actually, my thing is automation. That's my training is as an engineer, an automation engineer, and did chip design before I started my company, Nirvana Systems. And the whole idea was I was doing automation in the industry, and I thought, well, I could maybe apply this to trading. And so that's kind of been my focus for the company that I have and really my whole life. And so way back in the 90s, we made this little utility that would run on the DOS version of MetaStock. That goes way, way back there. And it would automate that version to do certain things, and Steve Akalis, the founder of MetaStock, we got to be kind of buddies and came out to Salt Lake City and met everybody there. It was really fun. And he agreed to promote this utility to MetaStock customers. It was very successful. And then after that, Jeffrey and I did some things with other products and sold each other's products and all that stuff. So long history, it's been great, and really appreciate the opportunity to work with you, Jeff, on getting these other automation products out for your customers. And again, it's all about automating something, So artificial intelligence is about automating trading signals based on AI, and what we're going to talk about today, or looking at to some extent, is chart pattern recognition that's automated. Right. So that's my intro. How'd I do?
Perfect. And I'm going to get out of the way. Your turn.
Oh, okay. Well, all right. Feel free to come back anytime, though. Okay. So yeah. So today we're going to be looking at the engine that we built, the chart pattern engine for MetaStock. Of course, that's our product. But my real purpose in being here and what I really want to do is help you with chart patterns, because whether you buy CPE or not, I know I can help you to see certain things in the market about patterns. So I want to do that. I've been teaching this for a very long time. The first version of a software that we did goes back to probably 2005, I'm thinking. It's been a long time. So, we're probably in the 6th or 7th version of it. So very mature technology. But through all of that time, I've been studying chart patterns, working on them. So I think I can help you with that. And that's really what I'd like to do today. Okay, so let's go ahead and dive in here and look at finding the most predictive and profitable chart patterns in the market today. And there are quite a few. Before I get going, I'm going to be covering a lot of material here. I'm going to talk pretty fast. So there's a book we have that's free. It's an ebook on chart patterns. And if you'll go to fulgent.ai/MetaStock, you'll see it up there in the right corner. There you go. You can just click that and you download that book, and it has all these same patterns in it. It has examples and all that stuff. So that will probably help you in this learning about how chart patterns can make more money for you in the market. Okay, so let's first start with what the heck is a pattern. Now, if you've been trading for a while, I'm sure you have a really good concept of that. This may be a way of looking at it that you hadn't considered before, and that is that patterns reflect psychology. And we know, we have a big gap. What does that mean? That means a lot of people are buying the stock or whatever it is. All of a sudden, they can't sell it at the price it was at. There's too much demand, so they have to raise the price to meet the demand. So you've got demand. Well, that's a psychological factor in the market. And the other thing is that everybody's going to see that gap. They're going to see it happening. So the gap pattern not only reflects psychology, but it determines market behavior. And every chart pattern we're going to look at has those two things in common. And what we're looking at is what is the likely behavior from what we are seeing right now. And these things are amazing. Now, people haven't always believed that chart patterns work. This is an art back in 2000. These gentlemen at the Wharton School and MIT decided to write a thesis, or I think it was their master's. Anyway, they did a pretty big project on this where they were studying chart patterns, triangle tops and other things like that, and trying to see if they really were predictive. And so they looked at thousands and thousands of charts and studied it very carefully, very rigorous report. And they found that, the results showed that the various patterns occurred far more frequently than if they were truly random. And again, this goes back to the days when people thought that technical analysis was voodoo and it doesn't work, and that's just bunk. It does work. So they proved it in this paper, and it's McKinley and Lowe, if you want to look that up on the internet. Pretty interesting stuff. So, but we don't really need them to tell us this because we know they're effective, right? So here's a chart of the index I just marked up one day. I just, what the heck, I'll just mark all the patterns I see on here. And, you got trend line breaks and consolidations and support levels, resistance levels, all these things. And every arrow is an implied action from the pattern. And so there's lots of them happening all the time in the market, and they're very easy to pick out if you're looking and you know what to look for. And so that's what we're going to be talking about, is how you do that. Okay. There are 7 patterns that I want to talk about today. And I actually wrote a book on this called The 7 Patterns That Consistently Make Money. I published it in 1998. And I think Trader's Library has it for sale, but don't worry about getting that. That little book I told you about has the same stuff in it, exactly the same stuff. So, same material. So if you download that, you'll have the book basically. But I wrote this about the 7 patterns because I began to realize that these 7 are really the ones that work. And there are other patterns. If we just go through these real quickly, trend lines, support resistance, consolidations, volume patterns, Fibonacci retracement, gaps, and saucers. There are other patterns that are basically derivatives of these. So tops and bottoms, double tops, triple tops, that's basically support resistance. It's a specific way it looks with the double, triple deal going on, but that's really what it is. A cup and handle is a saucer followed by a consolidation. And then head and shoulders is really either a trend line break or a support resistance pattern, depending on how it's formed. So these 7 are really the basis for everything. Our software does recognize these others too as derivatives, but really the 7 are all you need to look at or learn, because the others are derivatives. Okay, so let's dive right in here and look at the first one, which is trend line breaks and reversals. So I have kind of a diagram of what these look like. And we're gonna look at charts in a second here, but you have these lines formed under pivots. We call them pivots, turns in the market. So here's lower trend line, upper trend line, and what happens is you either have one or two things occur. Either price will break through the trend line, or it'll bounce off of it. So there's breaks and reversals. And when you see a really well-formed trend line in a market across quite a few lows, and it's broken with force, what happens? The market sees that, okay? So for all of these patterns, the thing that you want to ask yourself is, is the pattern obvious to the market? You know, would anybody look at that and say, oh, geez, you know, that's a sloped support level basically, and you're going through it pretty hard, you're going to get follow through. And, you know, so, but you always ask yourself that. It doesn't matter what software says or anything else about there's a pattern here. It's does the market see it? But this is a really important formation. And I said down here that strong breaks can result in very large moves, and they can, because again, the market gets fearful if it's going down through a trend line, and you know, really excited if it's going up through one. So sorry, I've got some Austin allergies are affecting me today. We've got a lot of rain going on, but I'll be okay. All right, so we looked at this sort of diagram of this thing. We want to look at the real patterns now. So let's go ahead, and you might imagine that I'm going to bring up MetaStock. So let me go to my machine over here, revive it. Wake up, please. Thank you. So here's MetaStock, and this is the first time I'm going to bring up our engine. I'm basically going to use the engine to show each of these patterns to you because it just finds them, and that makes it so much easier. I could draw on the chart and all that stuff, but you know, might as well use the engine. So in MetaStock, they were great, by the way, helping us implement this. I mean, super people over there. I just have to say that every time I talk about this, because they made it really easy for us to do all these things that you're going to see. It's pretty magical, actually. So we were able to get a menu item in the tools menu for our product. Fulgent AI, it's right there. And so, and you can see there's quite a few different things in here. We're going to be looking at the pattern module. There's AI and stuff down here that is different, but the pattern module is right there. And I just double click it, and it comes up with this interface. And you can see the very first thing here is trendline breaks and trendline reversals right there. I'm just going to activate those. So this is our Fulgent Pattern Expert interface. And we're going to talk about all this stuff over here in a little bit. But you can see it's going right down this thing. These are those major patterns that we were talking about right down there. So we're going to turn on 2 of them. And I'm going to click OK. And now I'm going to refresh MetaStock. And voila. Patterns form. Okay. And actually, let me zoom if I can do it here. Let's see. Zoom in a little bit here. The other thing I'm going to do, since I've got this up, is and let's just pick one in here. Okay. So when I click next to one of these patterns, you can see that it tells me there's that same picture you just saw with the trend line breaks and reversals. And if we just look in here, zoom in a little bit more. Let me see here. Okay, a little bit more. We'll just wait a little bit. All right, so here we go. This right here, you can see that trend line going right down across those highs. I don't really need to draw it for you, but I will. Big old cursor there. And what the software is designed to do is detect the earliest possible point of a signal. So when it sees a trend line being broken, it's going to put this little symbol out here, this little arrow, and you probably can't read it. It's really small, but it says TLB for trend line break, a trend line break. And it was a little early. Okay, so again, when I look at that, you know, the program is saying I see a break here, but you look at it, you go, what break? It's not enough. You know, the market isn't going to react to that. But over here, oh yeah, baby, now we're talking. I got this nice line. We're going through it. Oh yeah. Oh, and we've got volume coming in right there. Yeah, that's good too. So there's your trend line break. The same thing up here. This was a little bit early, this one, going across those lows right there. But then we had the move that came right after that. And if we go to the right over here a little bit, you can see there's another one here, trend line break across these highs, and so on. So we'll go back to the left here and look pretty over here. Nope. Okay. So we just have several. And then sometimes, like I say, you'll get one. This one's firing off of a trend line across these tops up here. Or wait, I'm sorry, across these lows. And so sometimes they don't follow through. This is one of those cases that didn't do that. It saw the trend line break through those lows right there, but it didn't follow through. So that can happen too. But generally what this will do is find those for you. And so as we look across here, you know, we see those forming. All right, so that's the trend line break. And let's see, I thought I turned on trend line reversal. Let me look at that real quick again, because I thought I did. Not seeing any in here. 1 second, here it is down here on the taskbar. Patterns and trend line break reversal. Yep, they're turned on. So I guess Apple just doesn't have any right now. At least don't see in the chart. Okay, so that's just trend line breaks. That's all we can find from that. All right, let's go ahead and go back to the presentation and move on to the second pattern. So number 2 is very similar, except it's support resistance breaks and reversals. And you know, support resistance is like a trend line in that it is a place where price is going to react, either going to break through or it's going to bounce off. And I would say, you know, breaks are probably more common, but when you get a support break, very often you will get a very big move. The same for resistance breaks. If you're in a kind of a bullish market and resistance is broken to the upside, like right here, can be pretty phenomenal. We've seen lots of this happening recently, you know, in the recent uprun after the pandemic. So that's the pattern that's trying to find. Then the reversals are the same thing, except when it gets up to here, it doesn't go through it, it reverses off of it. So you have, you know, support resistance breaks, support resistance reversals. Let's go back into MetaStock here, and I'm going to go back into the AI, Fulgent AI chart pattern engine, and we're going to turn on the support resistance pattern. So I'm going to turn these off and turn these on. I have a reason for turning them off, which I'll explain a little bit. All right, refresh. Okay, so if we look here, like this is a good example. There's a couple here actually. So we go across these highs here. Let me go ahead and put a line across right there, and it sees that resistance level right there, right? Let me go and zoom in a little more, a little bit easier to see if I am zoomed in. Okay, so and there's some here too. There's a support there and a support here. You can see that in the chart, and those are really pretty good little moves for 3 or 4 days there after that happens. But this is a break of resistance, goes through, breaks through. We have a nice little increase in volume down there. So if you're looking at charts by yourself, just look at them, and you see a break of something, you want to look for volume accompanying it. Very important that happen. If it's there, it's just so much better. If we go to the right over here, we can see more of this. Here's a support break right here that was really fairly predictive. And, you know, so here's another really short-term one that was good for several days. And if we keep going, see what we see on the right edge here. No, none recently. Okay, so that is your support resistance break and reversal. There's a break here that was pretty good, and a reversal there. Let's see if we see to the left, and there's a really good break right there. So again, it's seeing this resistance, and again, you're looking at this thing, you know, regardless of having the software, you're just looking at this in the market, and you see this resistance level over here, right there. And it's broken with a pretty big bar. When we get down here, we see that increase in volume, right there. That's good. And remember, after any break, you're probably going to have a pullback, very common, and then it goes again. There's a nice gap right there. So that was good for quite a bit. That was about a 5% move right there. So that's nice. Okay, so moving right along. We got 7 to cover here, so I'm going to have to keep moving. Oh, there's a nice one there too. Look at that one. Woo! Off to the races. Okay. Let's go back in here and pick up door number 3, which is saucers. I love saucer patterns. They're so cool. And again, the reason they work is the market can see this smoothly changing price. So, you know, from a downward motion starting to accelerate to the upside. Oops, don't want to go there yet. Hold on. And then it breaks through recent highs and you're off to the races. These are really predictive. So let's just go look at them. All right, let's go back to Fulgent and CPE. I keep forgetting it's down here. It goes in the taskbar if I don't close it. If I close it, it menu, but it's on the taskbar. I just keep forgetting that. I'm good now though. I will remember. Okay, so let's turn those guys off, and let's find saucers right there, and click OK. I'll go ahead and refresh, and let's see what we got. Let me back up a little bit. Okay, and it looks like over here we got quite a few have formed, right? All through here, and you can see these are both saucers and rounded tops. And I think if I zoom in on this, you're going to see how powerful these are. See, here's this smooth turn here, and there's one here. Look, pretty much, I mean, those three are profitable, 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 profitable. These things just don't quit. I mean, look at this. You know, I mean, see, there's one that went flat, okay? But generally speaking, if you have this rounded motion, either on the bottom of the chart or the top of the chart, you're going to get a move when it breaks through those recent highs. It's just very, very predictive. So I love these things, and they're just worth their weight in gold. Okay, so that's a saucer pattern. Smooth curvature in the chart. And then from there, you look for the break of the recent highs, and you're off. Making money. Okay, this one is an amazing pattern. You see, because nobody understands why these work, really. I mean, they do. You know, they say, oh, in nature, you see Fibonacci numbers everywhere and all this stuff. Well, this is not really that much nature. This is the market, which is emotional. And so why does it happen that when you rally a whole bunch and you pull back halfway, that very often is where the turn is? Or 38%, which is Fibonacci number, you turn down. If you come down here and then 38% up, oh, we're going down, there it is. Or 62%. So those are the three primary Fibonacci relationships. There are others that people use, but these are the primaries. And it just happens to be an observed truth of market psychology. What can I say? They work. So let's go ahead and do that one. Oh, I remember now. It's down here. So Fulgent AI patterns, and where is Fibonacci retrace? There we are, right there. Okay, I've got this huge cursor, which I did for webinars, but it's kind of too big, I think. Okay, so go ahead and refresh now on the screen, and let's see what we got on that. Okay, so if I go back and I can pick any of these, let's start, I guess, here. This is a more recent one. So from here to here, that's about a 50% move up. So it starts down. It doesn't go down very far, but it does start down for a nice little move there. And we haven't talked about stops. If you're trading one of these Fibonacci turns, you would, you know, you would probably put your stop like right at the retracement point, which, you know, you wouldn't give up much if you put it here. But let's go ahead and go to the left, look for more. Here is a beautiful 50%. Now, how do I know what that is? Well, because I can go over here. I think MetaStock, I know MetaStock has this great little tool. If I can find it, I think it's this one. Yeah. And so this is the retrace. A 60. Rising. It gets to the apex of that move. Now you don't know that yet because you're on the right edge, right? But then the volume backs off and the chart turns around. And why does that happen? It happens because all the market participants, the buyers and the sellers are going, this is going to zero, I'm getting out, and they're selling. The buyers are going, what a deal, and they're buying. Well, at some point, everybody who wanted to transact on that stock stops. They're done. They made their bet, and they stop. There's no more volume coming in because it's like an event. It happened, and so it takes very little pressure to push the stock up. Very little volume, and that's what you see. The same for a top like this, comes up really fast, volume comes in, backs off, chart backs off. That's very likely going to keep going down. Now, what happens if you're screaming down, volume increases, and you keep going down when the volume backs off? Like I said, it takes very little pressure. It's like a feather sitting on a table. You just kind of go like that, and it goes. So it takes very little pressure. So whichever side wins, after that volume, that little hat forms, it's going to go that way. Okay, let's take a look at that in Apple. And by the way, there's lots of stocks out here. We could be looking at tons of stuff, but I find doing these presentations, I've got to stick to one symbol or I can't get through it because it's just too much time. So that's why we're doing Apple only here. And people like Apple anyway. All right, so we'll turn the gaps off and let's see. So I'm looking at the volume climax, which is down here. Okay. And we'll go ahead and say refresh. Don't need to close that. And let's see what we got. Okay. So here are these volume events. Now, again, this is looking for any that it sees. So there's quite a few picked out in here. Looking for one of the ones that like the market would see. And let's see here. Those are all pretty small in Apple. Okay. Still looking for a really good example. Here's the best one I can find in here. So you can see right here, the volume. I got a couple here. So the volume is increasing right there, and then it backs off, and the chart goes up. That's what that is. Okay, here you had an increase in volume right there. The chart, it doesn't make a big move, but it does move up from there. And let's see, look to the left here. And let's see, those were not very big. They move very small amount after the volume climax. But whenever they need to be, for this pattern to work, it needs to be a very visible deal, like an event like this, a lot of volume coming in, and I'm looking for others in here that are like that. Just checking it out. Okay. Now the other thing is the program is guessing that that's a volume climax when actually these are volume trends. Remember I said the volume builds up into a peak and then the chart reverses. Well, if it keeps going, it's going to go that way. So this is a volume trend and that's a volume trend. Even though the signal's the other direction, it's calling it a volume climax because it sees a little bit of movement down here, but the chart keeps going, so that's a volume trend, actually. Okay. There are many charts I've seen where this pattern, you see these things all over the place. The really, really well-formed ones, and I don't see that many here in Apple, but where there's just a really nice, major volume move, and then the little peak forms and the chart goes the other way. So that's a volume climax. Okay. All right, and finally, I think this is our last one. Check the time, we're good. And this is consolidations. And again, a favorite pattern because they're highly predictive. Consolidation occurs, it's any kind of a range that forms after a move. You've got to have a move into it, then you have a range, and then usually you'll break out of that range. Not always. You have consolidation failures that turn the other way, and those are pretty powerful signals, but generally speaking, they will move out of the range and keep going. So, and what's interesting about consolidations is that you will have like a move up to the center of the consolidation, and then it keeps going from there, keeps going up. So that, if you look at A to B and B to C, those distances are about equal, and you see that over and over again. Look at this one, C goes down to here, and then it takes off. So that CH equals HF a lot of the time. BD going from here, this low point here, up to this one, and then to C, so BD equals DC. That's this says here. That's just a very common formation in consolidations. It's really, really powerful. Okay, and it doesn't matter what kind. It could be a wedge, a triangle. It doesn't matter. It's just any battle between buyers and sellers that forms a range after a move. Let's go back in here again, and we'll look at that pattern. So patterns and consolidations. I'll turn that on. Okay. All right. And refresh chart. Back up a little bit here. Okay. So you can see these little ranges are forming. Let me go ahead and zoom back in here a little bit so you can see it better. So if I look in here, this is like a broadening top consolidation right here, and it breaks out the bottom. That's the market sees it. It's obvious you're breaking through the lows of that pattern. It's probably going to go down. This one was really pretty good. You had a range. It's not a great range. I mean, it's kind of just the same price action. Again, the program is looking for any kind of a range it can see. You break out and it turns around. Well, that's pretty obviously not going to work out because you came right back into the range. But that's kind of a sort of a borderline consolidation. Again, you've got to make sure, the program is a program. It's going to look for stuff that it thinks it sees. But you're looking at that saying, does the market see this? And I would say, breaking through resistance right here, that was a reasonable bet on that signal. This is a more classic range, and I can draw the trend lines here across there and across here. So you see that? So we're breaking through the top of the range, and it continues on. Okay. And then here's one here. Let's go and draw this one. Across here and across here. Breaks through. There you go. This one was a little premature, but if we look closer at this range, that is a broadening top consolidation, and it sees it and says, okay, we're breaking through the bottom. So, it's a great pattern. And again, different charts will show them much more clearly. We have several here. There's a nice broadening top over here. Look at this one. So it sees this range, thinks it's breaking out, but there's the news right there. It's this guy. Oh yeah, and that's a big broadening top, really powerful predictor. Okay, and of course I got to draw this one because just one more here. Okay, go give me a line there, and give me a line here, breaking through the bottom of that. Okay, so that is our last pattern. Now, what I want to do at this point is basically turn on all the patterns to show you the next thing about the software. So this is where I'll get a little bit more into the software, what this does, for those of you who are interested in it. But I hope just my teaching you about these patterns has helped you. Like I say, that ebook will help you see these things. They're very powerful in charts, and will help you make money, definitely, because I've done it. So it's fantastic. So a little bit about the software. If I click after any of these patterns, like right after it, it's going to show me the pattern, the commentary about the pattern. We have a website that has more information about that pattern. So that's going to happen within 3 bars, or I think it's 5 bars of the end of any pattern. The reason we limit it, well, two things. We want to have those bars there because you're going to run explorations on this. I'm going to show you that tool in a second. But often a pattern will set up and it doesn't really take off right away. Like you've got a gap, maybe there's a little pullback after the gap, but then it takes off. So you want to be able to see that pattern a couple of bars after it forms, and we set it up to do that. All right, so just click after and you see that. Let me go back to the PowerPoint here because I can show you this architecture of this thing. So here's kind of the whole thing. We've already talked about the expert commentary, about the chart annotations in here, about where these things are. And the things what we haven't talked about yet are the scans. But first, I want to talk about this configurability because it is highly configurable. And there's 2 things you can do that I want to show you real quick, and then we'll look at a scan. All right, because the scan is really powerful. We've used that here quite a bit, and it's great. So, okay, so Fulgent interface, and I'm going to turn on all of the patterns now. We have a thing down here, enable all, so you see they're all turned on. Okay, and let's say okay. All right, let's go ahead and close it this time, and I'm going to hit refresh, and woo, they're everywhere. Okay. So depending on what you want to see, some people want as many patterns as possible. And honestly, there's a reason to do this, because if you're prospecting in the market, running a scan, you want the person to look at it and say, oh yeah, that market sees that for sure. That's really the best use of it. However, we have this little database in here that we cooked up, and it's based on looking at about 2 million bars of historical data, looking at chart patterns and characteristics of chart patterns, like the slope of the trend line, how many touches are on it, the volatility around that trend line. There's like 14 or 15 things that we measured to build this database, and it figures out like which things are the most important. So we can use that in Fulgent by just going in the interface. There's a little slider right here that says you can change how profitable those historical patterns were by how they're formed by clicking in here. So if we go like to 70%, the 70% rating, and refresh, you're going to see that quite a few of these go away. Boop, and it's going to look at that. There's a great one, pretty good there. And it will start to identify. There's several saucers. There's a really nice set of volume climax. That's what we found. Break, saucer. So it's designed to reduce the number of patterns that you see to try to find the better ones. So it's a tool. In real time, you're going to want to do this because real-time charts are more volatile, and so you want to restrict the number of patterns that you're seeing. The other thing you can do, of course, is once you start using this, you're going to find patterns that you really like, some that you think are much more tradable for the way you trade. And so you can come in here and, like I was doing, turn off individual ones. But the second area of configurability is this term, because you can have, there's short-term, medium-term, and long-term patterns. Now, we have defaulted this to what we think looks good in the charts. Actually, I did it. I went through all these patterns myself and said, well, I think for consolidation, they really just want to see the medium terms, because the short terms are like little wiggles and the long terms just are pretty far out there. But what you can do is say, turn on all the short terms, all the medium terms, all the long terms. All right, now we're loaded for bear. Turn that off. Let's go back to show all. Now you're really going to see a lot of stuff, because it's going to show everything it sees. See, they're just like everywhere. And a lot of these are little bitty short-term patterns or longer-term patterns, and they're very good. Again, if you're looking for prospects, things to trade in the market, you may want to just turn them all on, the whole thing. So it has that flexibility, which is pretty cool. So highly flexible. You can look at just one pattern, different time frames, or the strength rating from the database, like which ones seem to be the best. I'll get out here and say restore defaults. So are you sure you want to do that? Yes, I'm sure. So now it's back to what it was when we started. Okay. And so the last thing I want to show, we got time here for questions too, so that's good, is the Explorer, because it's awesome. Let me refresh this. Now back to my default patterns. Boop, there we go. So if I go in here and hit the Explorer, all right, and on the daily time frame, you can use this in real time to find patterns in real time. Jeffrey could comment on that, but we're just going to do a daily scan, and I'm going to scan the, let's see what we got here. If I could find it. Let me see. Oh wait, I saw it. I think I've got it selected. I think. For the S&P, yeah, the S&P 500, right? 500 stocks. So we're going to scan that, and I've got all the patterns turned on, right? So normally you wouldn't want to try this at home because it could take a long time. But now wait a minute here. It says start. Oh, I don't have my Fulgent thing selected. I've got to go up here and pick the actual expiration. So let me find it. It's Fulgent AI patterns. Right down there it is. You'll notice we actually have a separate scan for each pattern if you really want to specialize. The reason you'd want that is that patterns can overlap each other, like a pattern can block another pattern. So if you really want to find all the consolidations, you want to run that consolidation scan. Because if I just run all of them together, I'm going to get lots of them, but it's just what you're trying to do with it is what matters. So we're going to do all the patterns, start expiration, and you'll see how fast this is. It's very, very fast code. The Fulgent engine is running in the background. So you've got MetaStock here and Fulgent's over here. It's a pretty big program to do all this, but so it's running in the background. It's all highly optimized code. And so it's able to do what you see right here. You can do the whole market in a couple minutes. But it's running on all of them, trying to find whatever patterns it can find on the right edge. And pretty much the time it takes me to yak about it for a few minutes, it's going to be done. There, it's almost done there. Okay, so it's found quite a few. All right, it's done. Here we go. And so let me see if we have any new longs here. Yep, got quite a few there. So in the long column, these are new longs, and this is on A. And of course, you can double click that and see this symbol, which I won't go off and dive into that right now. We can go through more charts if we have some time. I want to make sure I get your questions though. So we'll do that, but you can just double click and get that one. Here's the next one. And then if I look to the right here, it says ID. That is the pattern ID, the pattern ID. And in the manual, each of those patterns are numbered. So like a support resistance pattern is like a 503, I think, 502. I can't remember exactly what each of these is, but because it's looking for all of them, we're going to tell you which ones they are. So you've got long, you've got short, then there's the in long and the in short. This is really important. I was talking about, something fires, it may take a couple days for that stock to take off from that pattern. So here it says this is on AFLAC. It's in long for 2 bars. So that signal fired 2 bars ago. And so again, I could double click it and get to that chart. Okay. So really that's pretty much it. And yep. Okay. Yep. So there's a symbol there. So long, short, in short, and if you're in, the number of bars. So very, very powerful scanner, and it will take you to each of those charts that has those patterns. All right, and there's another nuance to this I'm going to cover in the slides in just a second, but that sort of covers what is in the product. You've got the expert advisor, you've got the annotation of the charts. By the way, the color that you see, I didn't mention this earlier. The color is where the pattern formed. So like when there's a, whatever it is, it could be volume climax, a gap, support resistance, whatever it is, it's going to show you the bars over which that pattern formed. We can't draw in MetaStock ourselves at this point. I know they're working on adding that capability, but so instead of that, we're just going to show you where it formed, and you can kind of see, that consolidation formed over those purple bars. So that's where the bar color comes from, and it is customizable. Okay, so couple wrap-up things here to talk about. I call them trading tips. And like I said, I'll come back to MetaStock because there's something in here that you can do with MetaStock that's really cool. I want to mention it. These are just some other points about trading patterns. So these, to me, are the most accurate, the most powerful patterns. Breaks, support breaks, resistance breaks, saucers, we talked about that, saw quite a few of those. Volume climaxes that are well-formed, they have to be well-formed, and consolidations. Those 4 are really, really accurate patterns. And okay, so that's that. The second thing I want to mention is that if you're trading really anything, but patterns especially, you don't want to trade a chart that looks like Verizon over here. You want to trade charts that look like Travelers because you want low volatility, so the breaks are consistent. The market sees that break. The market goes, okay, we're barreling along here, and oh my goodness, we're falling out of bed. So it's just real important. This chart, you just can't see it that easily because it's just all over the place. So try to trade the less volatile charts. Third point is, and this is that same picture I showed you earlier about the market, is look at the index. And you don't really need to use Fulgent to do this. You can just look at it and see, is there a gap? Is there a resistance break, a support break? Anything like that will indicate follow through in the market. And if you can trade with the market mostly, it's good. So use patterns on the market. That will help you. And this is the thing I was getting to, that MetaStock has this cool feature for this. There's lots of great plugins for MetaStock. I've gotten to know quite a few of them. They're awesome. There's just a lot that are really good. And I'm sure you own some of them. So if you will confirm your signals from other techniques with chart patterns, you're going to find you do a whole lot better. Like down here, I've got RSI. This is just a very simple RSI 14, relative strength index. Goes through 30 to the downside and up. That's a buy signal. And right there is a volume climax. Same thing here. Here's a trend line break. We looked at that. Here's Fibonacci retracement right at that signal. And here's a gap. Now, this one was interesting because it actually, the signal was ahead of the gap, but then we saw the gap and we say, okay, well, that's chart's probably going to go up there because another scan. And Jeffrey may want to show how to do that in this webinar, but might be better for another time. He can make that call, but it's really easy to do. So you can actually combine scans with each other. So whatever you're using, if it has a scan, pretty much every MetaStock plugin has one, you just feed it through the chart pattern engine and you're golden. You've got all these things popping up. It'll definitely improve your accuracy. Definitely, no question about it. So, all right. So I think that is it. Last thing I'll just put up here is that book if you want to get it. And Jeffrey, we've got about 12 minutes. How'd I do?
You did awesome.
Thank you.
Actually, I think this was one of the better times you've gone through it. I think we get better with practice. So
Usually is the case.
You're right. Well, if you don't, you're doing it wrong, right?
Yeah.
So you're going one way or the other. Anyway,
What's that?
You're either going one way or you're going the other. I'm asking a lot of questions from the YouTube audience about things, but I actually would be happy to show. And I think there's a couple of homework assignments you gave me. And I'd be happy to talk about both of them as well. So let me go ahead and I'm going to go ahead and share my screen for just a second.
Go.
I've got my MetaStock ready to go. And
I'll drop off here on video for a second. Go ahead.
Okay, no problem. So the first thing I kind of want to talk about is running a scan on an intraday time period. And that's something that you can do as long as you have MetaStock real time. And the one thing I would kind of caution you about is like if you're kind of expecting to run, let's say 4,500 securities, all of the optional stocks against your list, it's going to take a minute to kind of go through. And depending on what type of periodicity you're looking at, if you're looking at a 5 minute, it might actually take more than 5 minutes to actually complete an exploration, but you certainly can do it on a 5 minute chart. Typically, what I recommend is, and there's some resources for this, but kind of limit the list that you're looking at. Like go in and if you're looking at a certain volume or a certain number of shares to trade as a minimum, make a smaller list. So if you want to scan intraday on the S&P 500, that doesn't take very long, and you can do that very, very effectively. If you're looking to do 4,300 stocks, it'll do it for you. But I would narrow down that list a little bit just to kind of get what you're looking at. So that's the first thing that you wanted to talk about was scanning against intraday data. And right here where you see the periodicity, you can set it to whatever periodicity, which was, I think, a word we made up. But you can set it to whatever kind of periodicity that you want. The second thing that you want to talk about is if you want to run 2 scans at a time, it's actually pretty easy to do. Right here, I've got the Power Console open. I'm going to go in, and I actually even have a pre-filter exploration here. I wrote a blog one time about how to set up a pre-filter exploration. If you want me to send you that article, just drop me an email at jeffrey.gibby@metastock.com, and Greg will put that in the chat for me if I ask him nicely. So, but if I wanted to run 2 of these scans, you just have to select them. So if let's say I wanted to come down here and I'm just going to choose 2 at random. Obviously one of them is going to be CPE, but let's just go ahead and grab the 2 that I can find real quickly. And I'm going to basically walk through what the options are and how they actually work. Right here, I can use the results from the preceding exploration. So when I run the first exploration here, it'll eliminate everything that's not filtered out of there. And then it'll send the results of that first scan into the second scan. Okay. I can, if I wanted to run a scan against the whole S&P 500 for both lists, I basically just use the selected list from a previously use the selected instruments for all explorations. And so I would run S&P 500 or whatever you selected through both of the instruments, or use each exploration's previously selected instruments. This would go in and actually, it's a little bit more advanced, but it'll pick the same list you used last time to run that scan. So typically you're either going to use this one, which is using the results and kind of filtering it and then filtering it again, or this one. We actually did talk about this in a little bit more detail in the boot camp that we put together, Ed and I did. on-chart pattern engine that comes with the product too. And I kind of walk through how to do this. And I even think I talked about how to do a chart pattern engine or pre-filter scan. Sorry. But that's it. It's very, very easy to use. One of the things that we try to do when we design and develop app software is make it easy to use. If we ask a question, you showed us how to find historical patterns. What about actively forming patterns so we know when to make a move? So what was going to happen is if you run that exploration, it's going to look for completed stocks that have completed on the current bar. So right now, that's actually a pretty good recommendation. I think we'll probably look at it. But right now, what it's going to actually do is look at confirmed patterns that have completed on the current bar when you run that exploration, and it won't look at things that are forming as patterns. So just sort of the ones that have confirmed. So
I can add one thing to that, Jeffrey. So it's designed to find the pattern at the earliest possible point. So when you look at a lot of them, you'll see that it's just barely, making the condition for the pattern to happen. The idea that is so that you can see more opportunities. If we waited for it to be completely confirmed, like you wait for the move, well, now the moves happen. So we try to show them, when they're seen, which is just the first little bar breaking through that support level or whatever. So anyway.
Oh, that's a good point. That's a good point. Thanks, Ed. Appreciate it. All right. So the program has been very, very popular. Here's a list of all of the stuff that's actually been included in it. All in all, there's an expert advisor. You get the explorations that come along with it. And what we've done is we've actually recorded the live bootcamp that we've done. It's going to be included. It's a recording. It's not a live session, but we'll record a recording of that live session as part of your purchase. Normally, the cost of the chart pattern engine is $1,495. Here at the webinar today, we're going to do a cost of $995. We're going to back it with our money back guarantee, so we'll give you a 30-day money back guarantee on it. You can do this by giving us a call at 800-882-3040. You can visit us online at metastock.com/FulgentCPE. And if you have questions, if you want to see some chart examples, et cetera, you can visit us at metastock.com/saleschat. I'd recommend you try this. We do offer it with our money back guarantee. We want you to be able to try it. We want to give you a low risk reward ratio. By far, it's one of the best add-ons we've got in terms of the specificity, the diagrams that it shows you, kind of the idealized scenarios. And you and your team did a fantastic job on this. So
thank you.
You should take us up and try it and see if it's helpful for you. 800-882-3040 or metastock.com/FulgentCPE. Anyway, that's what I got. Ed, how did I do on my part?
Great.
Okay.
And thanks for that little demo there. That was good. I
want to say thanks for coming, Ed. I want to say thanks to everyone that's coming. I hope you're staying healthy and safe. And the next time we do one of these, we'll be in the office. And I hope to see you there. 800-882-3040. Thanks for coming, guys.
Thank you.